All right, guys, welcome to Module 3 in the Elite Price Action and Technical Analysis program. Now, I still have some skepticals when it comes to price action trading. And I think a lot of it has to do with not really understanding what it is and thinking that this is a very difficult proposition. And it's not. It's actually a lot more simple than you think. And if you just follow along every day and kind of listen to what I'm saying about price action, about what I'm seeing and what I'm pointing out, you'll see it. Things just repeat themselves over and over and over again. Is it perfect? No, nothing's perfect. But when you have something that's going to be right, 70, 75% of the time, and you execute at a high level, you can have between a 65 and 75% accuracy rate on your trades. Like I said, nobody's perfect. So if we're getting, if this price action and technical analysis is putting you in the right place 75% of the time, and you're operating on a 65%, win rate, you're good. That is good. That's all we're looking for. Remember, we talked about yesterday, not focusing on the P&L, but focusing on your ability to execute. Your ability to do the things that you need to do in order to put yourself in the right positions. Because the real money in trading is in the mindset. Do you have the mindset to be able to attack and thrive in the market? It's what it all boils down to. But that's another story for another day. So last week we talked about price action analysis, and I went over each of the candlesticks and what they mean, and so that you have a good foundation to win. So when we start putting these candlesticks together, they'll tend to make more sense to you. Okay, because it's all about us putting this together to where it makes sense, and then you're able to figure out or have a good idea of where price is going to be moving, at that point, after that point. So that's what we talked about last week. If you missed it, go back and watch the video. I did email it out, and the PDF along with it. I did email it out for you. So if it's not in your email, or you accidentally deleted it without actually reading it, let me know, and I'll get it to you. So price action trading is what we're going to talk about today. We talked about the analytical part and the analysis part last week. This is putting the analysis, price action trading is putting the analysis into practice. Okay, it's just like when you playing a sport. You learn the fundamentals first, and then you go out and you put the fundamentals into practice. So the analysis is kind of like the fundamental part of it, and then when you go into price action trading, you're actually putting everything to work, and that's what we're focused on right now. So price action trading is a methodology that involves analyzing the movement of stock prices on a chart without relying on indicators or other technical analysis tools. Indicators meaning, moving averages and stuff like that. Now, I still use moving averages. I still merge some technical analysis, with the price action, which is fine. As long as you understand there's a fine line and you can't go too far with it. But price action traders focus solely on the historical price movements of a stock to identify patterns and trends that can be used to predict future price movements. So remember, I talked about last week, we were looking at each individual candlestick, and then you put these candlesticks together, and sometimes they form a consistent pattern that will help you identify what's likely to happen, based on the pattern. That's one way price action traders do it. I, bring it closer to the vest. I'm using the live price action right then and there. I'm not really looking at patterns. I'm looking at the candlestick, and then I'm looking at what's happening on the next candlestick. What are we doing there? And that's going to give me a good idea of where I need to be placing myself. But that's what I'm trying to teach you and show you every day, because that is very, very important that you're understanding what's happening. Like this morning, I reacted a little bit too late, and we're going to look at that. We're going to look at this morning's trades. But I reacted a little bit too late to shortening up my profit targets. Plus, I know in this type of market, we shorten our profit targets and we increase our first profit percentage. Now, I've never decreased mine from I guess several years ago when I started having to make adjustments based on, low volatility in between earning seasons. And that's basically what we're doing. We have gotten ourselves into those 5 or 6 weeks ahead of the next quarter's earning season. And so it gets really slow. We don't have a whole lot of follow through, and it can get really frustrating. And but if we trust our price action and our ability to read it and implement it into what we do every day, then we're going to be fine. We're going to get there. So the theory behind price action is that all necessary information about a stock's value is reflected in its price and volume data. For me, more so price. I don't really focus a whole lot on volume. As you guys know, you rarely hear me talk about volume. I do mention it, and I do talk about it when I feel like it's relevant and it comes into play. But for the most part, I'm looking at pure price action. Because let's say, for instance, a stock could have killer volume, but if the spread is untradeable for me and not in a position where I could manage my risk, volume is not really a thing. It's not important. What's important is the price action. What's the price action doing right now? That's what's important. All right, but this is key. By studying how different price levels interact with each other over time, we can gain insight into market sentiment and make informed decisions about when to buy, sell, or hold. Okay, so there was a question today, and let's bring this up now. There was a question as to why God dog, Microsoft just cracked. If we lose the 20, man, we're done. Put a fork in us, we're done. But Meta, the question is, Ed, why are you still holding on to Meta? Well, look, I know we've fallen into a rut. Let's just use this for now. What are you seeing here? We're inside. It's forming a triangle. We're inside. Price action's tightening up. I don't know whether it's going to go high or whether we're going to lose it and fall back low. We've got a 50-50 shot at what we're seeing here. But we're continuing to make, over the long term, lower highs, and we're making higher lows. So eventually, as these converge, the price action is going to get tighter. Once it breaks out, we're going to have a good trade. But the price action is telling me to hold because I haven't lost the trend. Does that make sense? I haven't lost the trend. And that's where price action comes in. I can lose on this, but with me employing this strategy, consistently, it's going to work more times than not, and I'm going to come out on top. So in this case, price action is telling me to hold. Now, once this breaks, if it breaks against me, price action is going to tell me to get the hell out. If it breaks in my favor, then I'm going to start looking at the price action to determine whether I need to take profit a little early or whether I have a good chance of this making the full move on my initial share size. I know it may sound a little difficult, but once you get this down, if you take the time and immerse yourself in it, you'll see just how easy it is to have a good thesis on, stock direction. And you don't need a degree or anything else to figure this stuff out. It's relatively simple. Let's see. Okay, price action methodology includes identifying key support and resistance levels. Isn't that what we do every day in the morning? Isn't that what we're doing? We're looking for key support and resistance levels, right? We're not so much looking for trend lines, although sometimes they are relevant, especially if you're using if you're using the FinViz charts. FinViz has trend lines, and those you can kind of use, in order to help with your price action. Chart patterns. These are the candlestick patterns, the candlestick formations, that we're going to get into. That's the next part. Now that you know what each candlestick means, when we put them together, it starts to tell a story, and you'll be able to interpret that story. It'll be just like reading nursery rhymes. All right, so candlestick formations, other visual clues on the chart, like higher highs, higher lows, lower highs, lower lows, that type thing. And typically, it makes it easy when we draw trend lines to see it. Now, I really don't have to use trend lines. I can see it without drawing a line. But I drew the lines to kind of point this out to you, to show, okay, look at what's happening here. We've fallen inside this channel, and we're beginning to squeeze this price action. So eventually it's going to pop up or down. But we use trend lines to help see that, if you're having trouble visualizing it. So by using this methodology, price action traders aim to minimize their reliance on subjective interpretations of market data, and instead rely on objective observations for price movements. So the key words here are subjective and objective. So for those of you who don't really understand the difference, subjective means information or perspectives based on feelings, opinions, or emotions. All right, makes sense? Subjective is based on feelings, opinions, and emotions. Objective is based on verifiable information based on facts and evidence. So if we're using price action, that's verifiable information. You can verify it by just looking at the chart. And it's based on factual evidence. We don't have to really sit here and interpret the price action so much. It's just telling us. We're just watching it. It's providing all the evidence we need to determine, what we're going to do. So using price action is popular with new and experienced traders due to its simplicity and effectiveness in predicting market trends. Keywords: simplicity and effectiveness. It's simple and effective. We like simple. And if we can make simple effective, and that's an even better scenario. So while it requires patience and discipline to master, and it does, those who are willing to put in the time and effort can potentially achieve consistent profits over time, through this approach. You just have to put in the time, because it's going to take time for you to trust it. You're going to have to trust it. Does that make sense? You're going to have to trust it. All right. So I'll give you an example of subjective and objective. All right. So let's say you go to the doctor. And I'll make this real simple. Let's say you think you have a fever. You haven't taken your temperature yet, but you feel hot, you feel miserable. You go to the doctor and you're telling the doctor how you feel. Okay, that information you giving the doctor is subjective. Okay, because you're telling him how you feel. You're telling him that you think you have a fever, but it's not based on anything other than this is how you feel. I feel hot, I have a fever. Okay, so that's subjective. Okay, so once the doctor takes your temperature and he verifies that you have a fever, then that's objective data that he could use to help diagnose your medical condition. If he was just going based on what you're telling him you think is wrong, if he tries to make a determination about what's wrong with you based on what you're saying, they're being subjective. And I can't stand that. That's what these internet doctors do. But if the doctor examines you and verifies what you're saying with data, with factual data, then he can base his description or his diagnosis off of objective data, which is better. So how would you want yourself, how would you want your medical team to determine what's wrong with you and the best course of action for you to be treated? Would you want them using subjective based on what you're telling them, or objective data based on them actually examining you and verifying, some of the things that you say? So does that help? Does that make sense? Okay. So yeah, we talked about that. So objective and not, these are benefits of price action trading. We've got the objective analysis. Again, price action trading relies on objective observations of price movement. You're not interpreting subjective data. You're basing your decisions off of what's happening right now. The key to this, and one of the other big positives here, is that it helps you avoid emotional biases. And if you're focused just on objective, you can make more informed decisions. Less emotions, more informed. That's what we want to see. Right? That is 100% what we want to see. All right. So, flexibility. This is really good. Price action trading can be used in any market with any asset class, meaning any tradable security, whether it's options, futures, stocks. Price action trading works with everything. Alright, so it's really versatile. It's simple. Again, it's very simple and straightforward. It doesn't require you to learn how to use all these complex technical analysis tools. You don't have to learn all of that. All you got to do is come in and use what the chart is telling you right now. You don't have to worry about any of that other stuff. Alright, it is price action provides real-time information. So it may not be when you want it, but it'll be right on time. Alright, so you'll be able to quickly identify whether your trade is working or not. What do you need to do to manage it? And really it allows you, if you use it right, risk management will be a big part of it. Because price action traders often use risk management strategies like stop loss orders to minimize losses while maximizing gains. It's no different than anything else. Okay, but you're going to base your stop on, let's say, what you see in the price action. But when the price action starts to stumble, it's time to get out. Or if it's in a place where we can take profit, we need to go ahead and take profit. Case in point, let's look at our Tesla trade from this morning. Let's look at our Tesla trade from this morning. Boy, stop rubbing your head on my head, because you're gonna make me click a button I don't want to click. All right, so looking at I need to do 162.50. Okay, so looking at this, okay, I had to make an adjustment on taking it off here, because it just gave me the indication that, hey, we might not make it down. And look at the trouble it had at this level. So me taking price, even though it did get to my target, me taking price action here was the right thing to do because of what the chart was telling me. I know we were under the 9. I know all of this stuff. It doesn't matter. If price action gets stuck, that could mean it's ready to go back and challenge the rest of this resistance. It could 100% mean that. So it's all about, and this was already a predetermined target here. My next target was 162. And we were starting to get down there. But guess what? If it pulls back and we start to struggle here again, guess what? I'm taking profit. Because price action is telling me, hey, we're running into support here. You may not see it on the chart, but I've got some buyers that came in and started buying this up, or either taking profit. Whichever the case is, price started moving back up. You don't know buyers are going to come in and say, "Ooh, this is the bottom," and just start buying it up. We don't know that. So what we have to do is be patient and wait. As long as it's technically in play, you look at the trend we're in. Until this trend breaks, technically we are in this trade. We're good to go. Alright, so traders also use different price action strategies based on their personal preference and risk tolerance. Like for me, I'm comfortable risking more and trading a trend, a long-term trend. I'm comfortable doing that. But some of you may not be there yet. So your strategy is going to have to, be a little bit closer to home. It's still based on price action, but your strategy is going to adjust, based on your risk tolerance. And everybody has their own. The worst thing you can do is get stuck on a generic risk parameter, because it will take you out of trades, because some trades are going to rely more than others. Some will rely on less than others. And if you don't have it projected right, you're going to have a problem. So, in some strategies that use price action or trend following, like what I like to do, range trading, which we'll do sometimes, breakout trading, which is what we do in the first 30 minutes of the market, and we use it to tell us when it's time to get in or get out. If we're waiting on confirmation, we're using price action to confirm taking out a level or claiming a level. Alright, and if we've lost it, a level, or whatever we based our trade on, then we've got to get out. But when you think about it, all of these strategies rely on objective observation of price movement rather than trying to interpret market data. All this other stuff that analysts throw out, you may read or somebody may send you, and you're trying to interpret it. No, read the chart. Everything you need is on that chart. So here's some things that you really want to focus on if you're price action trading. Okay, you want to focus on the price movement. Price action trading is all about reading the charts and understanding how price moves. Focus solely on the price. You can get a better understanding of market sentiment and make more informed trading decisions. Okay, let that sink in. Let all of these sink in. Use support and resistance levels. That's why I am so adamant about using support and resistance and paying attention to it, as it's relating to our trading. Okay, very adamant about it. All right, so I've got Tesla we hit. Let me take a look at it real quick. Sorry about this, but Tesla was one of the trades that we were looking at. All right. So we did break through the little hang up that we ran into right here. And we got down to, where we could take profit. So 162.50. I'm looking for 162 for the 160 for the last piece. And we know why already. If you saw my post last night on Twitter, you already know 160 is a big spot for the option flow. We saw a lot of calls coming in. Puts. 160 puts coming in, expiring tomorrow. So I fully expect it to get to 160. And that, my friends, is reading price action. Because if you're thinking about option flow, what are you looking at? You're looking at the price. We've got evidence that price is likely to hit that level. All right, so again, support and resistance levels are key areas where price has historically struggled to break through. By using these levels as a reference point, you can identify potential entry and exit points for your trades. That's how I tend to use those for my profit targets. Using support and resistance levels, if waiting for us to break a level before I enter a trade, that's one thing. So you can't deny it. It's there. Okay, it's 100% there. And it's simple and it's consistent. We're going to look for candlestick patterns. That's what we're going to get into next week. Looking at different candlestick patterns that make sense. Okay. And the process for using these candlestick patterns. Here's the problem. You never hear me point out specific candlestick patterns. Because if you look for the pattern first, you're going to miss something. These patterns don't present themselves perfectly every time. But if you read each candlestick and you let the next candlestick start to give you the rest of the story, guess what? You're going to be in the position that you want to be in. It's not going to really be that difficult to interpret what you're seeing. So it's very, very important. Very, very important that we don't look at the chart and try to make it fit. Stop and try to make it fit a pattern. We're watching the pattern as it develops, and we're understanding. We're using the candlestick formation to help determine what pattern is forming. So if we're doing it that way versus trying to fit a pattern on a chart, we're going to be in a lot better shape. And I'll explain it if I'm not doing a good job explaining it today. Next week you'll get a really clear idea of what I'm talking about. Why you don't want to look at the pattern and then look at the chart. Okay, that's not trying to fit the pattern on top of the chart. It doesn't. By the time you get it figured out, it'll be too late. So we've got to work on figuring it out as the market's trading. You want to manage your risk, and we talk about that too. Some people, I get criticized based on the process I teach, but unless you are a brand new beginner, I am not going to teach you elementary school elementary school risk management. I'm not going to do it. Okay, we're going to put our big boy and big girl pants on, and we're going to, because there's no way you're going to make money without risking. If you don't want to risk anything, you're not going to make any money. And it's like I said yesterday, if you're trying to trade 25 shares or 50 shares and you're wondering why you're not really making any money, it's because you're not risking anything. It's great to trade smaller size. It's great to trade smaller size when you're trying to build confidence in your execution. And remember, I said we're not focusing on P&L, we're focusing on execution. And as we get more confident and we start putting more skin in the game, we're going to start making money. It's going to come. We don't have to sweat it. It'll show up. But more important, this is what we do. We keep it simple. We use the KISS method. Keep it simple, stupid. Because price action trading is all about simplicity. Not overcomplicating things with all these crazy indicators or complex strategies, thinking that that's the only way you're going to make money. It's actually easier to lose money when you complicate things. So if you stick to the basics, focus on price action, and trust your instincts once you've developed them. And that's what we're doing here. That's the focus, helping you, develop and trust and believe in your instincts. All right, so to sum this up, price action trading is a powerful approach that can help you make better decisions about when to enter or exit trades, as well as when to hold on to them. It's amazing how something so simple can pack so much power, but it can. Something so simple can pack so much power, but it can. Overall price action, by analyzing the price movement of a stock and identifying patterns in the chart, you can identify profitable trading opportunities while managing their risk effectively. And again, the key is going to be identifying the patterns as they're developing, not after they develop. If you wait for it to develop and you put the template over the chart and you say, oh, this is this pattern, it's probably too late to take a trade. So you want to be able to understand and interpret how it's coming, how it's developing based on you reading the price action and the candlesticks. Okay, that's going to be the key. All right, so overall, price action trading encourages you to rely on your own judgment rather than trying to listen to anybody else, trying to listen to the people on Twitter or Reddit or the news headlines, social media, what other chat room people are telling you. It's all about you. It's all about you. And it's almost to the point where, okay, you coming in trying to tell me how I'm feeling. Okay, I may be feeling a certain way, and you come in and you tell me, I know how you're feeling. You're feeling like this, or you're feeling like that. No, you don't know. I'm the only one that really knows how I feel. And it's the same thing with you dealing with price action. You're gonna have to identify it, based on what you see, not what somebody else sees. Don't compare yourself in what you have to other people. Okay, because price action should be based on your own interpretation and judgment versus listening to other people tell you what you should be seeing or feeling. All right, does that make sense? So I felt I needed to reiterate this because I sense the few people that I'm working with, I sense you starting to slip, not really buy into it to where, it may seem too simple to you. And you may think, hey, this is just too easy, too good to be true. This isn't going to work out. But of course, it does. And what happened to my... All right, any questions? So next week we're going to be getting into some patterns. So make sure you review. For next week, make sure you review the candlesticks and what each candlestick means, what each candlestick is telling you. And if you've already been trying to put, interpret what a candlestick formation is telling you, then you're really ahead of the game. Yeah, every time you get out of whack, you need to simplify and correct. Absolutely. You need to simplify and correct yourself. But yeah, let's say, all right, I'm gonna let me where is Finviz. All right, so let's look at this real quick. Now we do look at patterns. Okay, this one didn't work. So I remember this. This one did not work. Okay, AMAT is one that I was looking for to break out over the high. You see, look at this. Look at this pattern up to this day right here. Okay, so I'm reading this. Okay, this candlestick had a little wick to the top. It ran up and it sold all the way off and it closed at the lows. Really weak, right? So what am I going to expect the next day? A move down to support. That's exactly what happened. We had a move down to support, but look at the candlestick. Look at the candlestick that let me blow this up a little bit. Okay, look at the candlestick. A spinning top, doji, whatever the hell you want to call it. It's an indecision candle. We basically opened and closed at the same spot after it moved up and down. Alright, so at that point, we don't know what's going to happen the next day. We have to wait for this candle to open. It opened above the close price. So what does that mean? What does that tell me? It tells me that we're likely to go higher. That based on the price action, we're likely to go higher. And that's what it did that day. Okay, so the next day, which is right here, this is when, this is when this caught my attention. Okay, look at the pattern, this candlestick formation. This is 100% bullish to me. All right, 100%. And the next day, we kind of rested. We did make a higher high, but we kind of rested. Indecision candle. So what am I going to do the next day? What am I looking for? I'm looking for the same thing that happened here. I'm looking for a candle to open above my close price. The close price was 212.61. I'm looking for this candle to open above it. Guess what? It didn't. It opened below it. So based on that price action, this candlestick opening below it, what's it likely to do? What's it likely to do? Even though I've got I'm looking at this and I'm thinking long. This looks really good. We're holding support. I'm thinking long. But guess what? Today has to confirm. Right? Today has to confirm. And if it doesn't confirm, there's no reason to buy it thinking it's going to go higher. Okay? And that's what price action is telling us. Okay? And look at this. We even gapped down here. But all this is telling us this failed. Nobody should have ever been in this. Now, if you used subjective data, you didn't wait for the proof that it's going to go higher. You just anticipated it based on subjectivity, and you lost. Okay? And yes, I did get an email from somebody who was, they weren't happy. And it's all because they just jumped in because they expected it to go up because I said I was looking for it to go up. And I was based on price action, but it didn't confirm. Didn't confirm, so I'm not taking it. It's just that simple. Let's look at Tesla was another one. All right, look at the candlestick formation here. Look at what's happening. I'm just reading each candlestick. We're sitting on support. We're not really going anywhere. So I'm just waiting for it to crack. Okay, I posted this a couple days ago. It took, 2-3 days, and it finally cracked yesterday. See that? Beautiful. Look at today. What did we do? We opened below the close. So we were likely to keep selling today. Yeah, we had some profit taking because of the gap down. We expect that. We know this because this is how the market works. Remember, a big part of price action trading is learning how the market works. Understanding how the market works. How it moves. How it moves. So we know how this thing works. What happened, what kind of move we can expect after a big gap down. People are going to say, oh yeah, I'm taking profit. I'm locking in profit. And then once I do, if we start to sell back off, I'm jumping back in. And we get this type move. And we're profiting off of this. This is like probably the best and only trade that's really working out good today. I mean, the first Microsoft trade worked out okay. The second one didn't. But it's just pure and simple price action. That's it. And if you can immerse yourself in it, buy into it, develop the right mindset to be able to come in, execute it, and respect it, then you're gonna do fine. So remember, the money is in the mindset. That's where the money is. All right. Any more questions before I hit the button? All right, excellent.